Yo, yo, yo. Hey, thanks for being flexible with the odd times this week and last week and next week. Thanks. Let's go. Boom, boom, boom. Boo. Whoa. All right, so here's the story. I was up, they call it the study commons. I was in the study commons at, what was it, 1:30? I guess about 1:30. Check this out, product of the day. I guess you can't really see it. Super rare Starbucks coffee. You have to go to, they call it, I don't know what they call it anymore. My mind's not working very well, but you actually sit at this special little bar. It's upstairs. It's like a private room, and they have, anyways, you have to order from a menu and all that kind of stuff. Beautiful, fantastic coffee. Thank you, Starbucks, for finally making some nice coffee. Anyways, but Harvard has really nice coffee too. So anyways, hey, nice to meet you. My name is Wayne McDonald. I'm the Chief FX Market Strategist. Hang on, I'm also getting ready. You see the VIP room I live in? It's like I'm 20. Sorry, I'm getting my shoes on. Busy day, not enough sleep, but I'm getting the grades, and I'm here for you as well. So thank you for everything that you do and your flexibility and all that kind of stuff. All right, so we're going to do gold and oil, dollar pairs, yen pairs, that kind of stuff. Try to answer as many questions as I possibly can. And then I have some case studies to do. I need to eat breakfast, all that kind of stuff, and class coming up. So anyways, now I found out why these apartments that I'm living in, they're dorms in a house. Harvard doesn't really have dorms, they're houses. But some of them are laid out weird, and it's because a lot of the students 100 years ago, they had valets. So I'm like, I think maybe I'm living in the valet's apartment, but whatever, it's cool. But I sure do miss my Tempur-Pedic. Oh yeah, and my wife and my kids too. Yeah. So, anyways, I don't miss you because I'm hanging with you every day, bruh. So I hope you appreciate it. Again, thank you for your flexibility and all that kind of stuff. Feel free to ask questions. Although, yeah, I'll do what I can. I don't usually have as much time as I do back home. So thank you for being clients of Traders Way. We must thank them. Whoop, 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 whoop. Thank you, Traders Way. So make sure you open an account there. Start with the demo. Try the execution speed, the spreads, the swaps. Get used to it. I think you'll be very, very well. I know you'll be very surprised. I've actually tested their execution using third-party software, and Traders Way is way better than pretty much every big broker you've ever used. Way faster. But like I showed you yesterday, after 2 months of being in that one trade, I was up 150%, which means that's going to be more than 1,005% a year, 1,500% a year. So we're talking, what is it going to be? 1,650. It's pretty good for a year. Well, thank you, Marina. All right. Holy smokes. All right. Yeah, okay, so we'll do this. Just wondering if I'm going to need glasses. Holy smokes. Old age and not enough sleep. I'm going casual today. Let's see. These are not the right glasses, but we'll go with them. So, what was the theme for Monday? Gee whiz, what day is it today, honestly? Tuesday, yeah. What was the theme Monday? That we had a massive move last week, right? And I said on Monday, because we hit a bunch of targets, I said you need to know, first of all, you need to know what to do when markets open out of position. You need to know the targets, first of all. And then if we're hitting targets on Monday, you were really supposed to be in these trades Friday, maybe even Thursday. So I hope you wrote all that down. Okay? And by the way, I see lots of people saying good morning and all that. And, well, good morning. Okay? Okay? So, look what's happened since. CAD yen down a little bit, down to the 4-hour 21. Well, we know that's a key moving average. How about the Aussie yen? Down much more significantly than the CAD, but to the 4-hour 21, which we know is a key level of support and resistance, in particular when markets open out of position. Pound yen was rejected from the top very significantly, but went through the 4-hour 21. What would that indicate? Weaker than CAD and weaker than Aussie. Yeah, can we focus on the trading, guys? I can't go back and forth. I can't keep up. Gary's like, wait till you're 80. GR, you're 80 years old? Right on, man. Suppose. It's all relative, right? Yeah. Well, you should hear my problems, Gary. I have to hang out with 20-year-old girls all day. I look 80. I feel 80. We all have our problems. Come on, Gary. Everyone stop and cry for me for a second. All right. So anyways, so pound is weaker than those commodity currencies, and even euro took a nice breather, but is it a weakness or is it just the fact that it hit the target? And I think it's really hitting the target. Okay? But go back to this. It's been 24 hours. And we specifically talked about this. We specifically talked about it being bullish here and being bullish here. And those guys had this target. What happens? And I said, here's the plan. Down into this area here. And if you're a bull, it's a mediocre trade, but you have license to try for that. Okay? Right? Yeah, Gary's like, you're never old in your mind. Yeah, I'm starting to learn that big time. Cruise around campus, I feel young, and then I see myself in the mirror, and I'm like, oh my God. Who's that? So, anyways, you should know that this is an area to take profit and walk away if you're a bull. If you're a bear, you have license to sell. But that's a counter trend trade, and it's a shorter one because when you're counter trend trading, your target is this 21 EMA. As a bull, we assumed it would go farther down, but that's because we're bulls, right? In that case, we want the bigger dip because we love buying low. And this is it. So that's the perfect spot. But I said it's mediocre because we're actually now back in the middle of the range, remember? How do you range trade? You buy at the bottom, you sell at the top, you buy at the bottom, you sell at the top. I mean, I said bears should take profit here, but a stubborn bear, let's do another color here. A stubborn bear, their target is way down here. It's just going to take, well, most of this week if that's going to happen. Okay? You know what I'm talking about? So I don't know what's going to happen the rest of the week, but the discussion we had on Monday about this, you need to walk away having learned something. I think that's a lot of that. I think lots of bulls could just keep blindly buying and give back, let's say, 30 to 50% of the profits they made here in the other move. But of course, if they gave 30 to 50% of the profits back because they didn't know what they're doing, it's very likely that they didn't do the right thing in this move. So make sure you write it down. Tell me, baby, are you sorry? All right, so kitty cat. Nice and simple. One moving average. What do you stake? We're using a regression. We know a mean. We know standard deviation. How's it working for you? R1 is the top, so I'm thinking this trend is likely to continue upward and have an out of position move for early target release. In English, that means it's gone up, bro. Dude. Right? Okay. The other scenario is R1 predicts S1. That's down here. That works too, right? Like imagine it did this now. La 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 la. You wouldn't be shocked by that, would you? Okay. Right? La 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 la. Right? That wouldn't be that shocking. Oh my God! Look at that. Okay. But right now, I'm eyeballing that 21. I'm probably paying too much attention to it. I get it. But it's dynamic level of support. We have a roll reversal. We have a gap fill, right? Fill the gap, continue mission. There's a lot of things that kind of go wink, wink, nudge, nudge. CAD's pretty strong. I'm bullish on oil. I'm bearish on yen. But it's the summer, so sometimes these things lie to you. And it could just as well just pop down like that. Yeah, okay, fine. I won't cry about it. There were, speaking about like not crying about it, there have been years and years past, and I mean many years ago. I used to get frustrated during summer that it would move sideways and sideways and sideways and sideways and sideways and sideways, well beyond where I would expect. So after some years of experience, I got to expect that summer would slow down, and I'd change my trading behavior, and I would change my expectations, which is the most important thing. And then, I don't know if the market changed over the years, but all of a sudden it went longer. So I'm like, oh man, I'm trying to be patient here, but this consolidation It's going on forever. And then the market developed to the point where it would move sideways up until the day I emotionally broke. Right, when you're just like, oh my God, it's never going to trend again, and you totally give up hope, and you melt down emotionally, and you just have a total breakdown as a trader. That's the day. The day after that is when the trend shows up, and of course, because of that, you gave up and you missed it. So now I try to protect myself where, hey man, if it don't work out, I get it. It's summer, I can live with it, you know. So one of these things is likely to happen. So I might just buy it here, jam a stop. Maybe I won't buy it there. Maybe I'll counter trend if it comes up here. I mean, that seems pretty likely too, right? I mean, that was my first instinct, that we work our way up here and then we counter trend. So it does a move like this. Yeah, I can live with that, right? Keep yourself free, like a free bird. Leonard Skinner, man. What's the other one? My mama told me when I was young, sit beside me, my only son. Right? Don't lust for the rich man's gold. All right. Dollar. And be a simple kind of man. Do this for me, son, if you can. Dollar strong, huh? What's up? Steven, you're limping in. You're using limit orders. Why don't you start pulling the trigger? When you're in situations like that, especially when it's feel like, then you need to change your environment. Okay? So when you're things like, I have the skills to do this, but it's not working, well, then you need to change the environment and make it work. Yeah, so don't use the orders anymore. Apparently, you're not, right? You're missing them, so you're not picking the right places. Yeah. Well, what are you going to do? During the day, too, it's funny. Yeah, all right. What part of the world do you live in? Be a simple kind of man. Will you do this for me, son, if you can? All right, he's typing that out, I guess. All right. Cambridge, UK. Yeah. All right. Do yours just before or just after dinner. You need to pick a time that you can trade. I would say, I mean, I guess that's the other thing. Maybe you're already doing that. Well, you're going to have to come up with a strategy. Okay. Now, typically the wrong strategy, Stephen, is to place loosey-goosey entries to make sure you get in. And, of course, because of that, your stops have to be wider and, you know, I don't know. And that's the other thing. I mean, you could do that. So when I've mentored people in the past, one of the things I've done in the beginning, because everyone always tells me, everyone always tells me, like, Wayne, I'm really good at technicals, but I'm not profitable. And then I see them trade, and I'm like, you know, your technicals are not that great. Okay, on lunch. So now, no, Steven, this is a terrible time to trade. so to speak, unless you're just scalping your way through oblivion. But this is not a good time to enter a plan in the middle of the day. It's like walking into the middle of a battle. I mean, you should have had a plan the day before the battle, right? So here's what you need then, Stephen. You need to learn how to swing trade. Okay. And so, anyways, this is the story I was going to. When I've mentored people in the past, and they're like, "Hey, I'm pretty good technically. I'm just not profitable." And I see what they're doing, and of course, I can see why they're not profitable. So one of the things I'll do is I'll say, "Okay, for the next week, I want you to make trades, but you're going to have, let's say, 150 pip stop losses." Okay. And they're like, 150 pips? That's crazy. Well, drop your lot size. Don't worry about it. You suck anyways, right? You're losing money anyways. So at the very least, listen to me. So anyways, and what happens is people start getting the entries. Okay? They start getting the entries because the stop is so far away, it doesn't mess with their trade entries. Very often people get break-even trades because their stops are so close that they get unlucky. There's a piece of news and it pops, knocks them out. Maybe the spread widens overnight and it knocks them out. It's a great trade, but the timing isn't quite right and they get knocked out. And they never see the winners. And of course, you want to get knocked out on your losing trades. So they have losing trades and break-even trades, but they have very few winners, right? So I test this. It's a testing process. If you have a 150 pip stop and you get knocked out, your trade plan sucked. There's no like bad luck on that. You entered a trade and it sucked to the tune of at least 150 pips. But if your trade plans are good, like your strategy is generally good, you're selling in a falling market, you're buying in a rising market, you're not going to get knocked out on a trade like that. You're just not. There's no way it's that bad of an entry. Dr. Ranges, that's a lot of pips. Well, you're over leveraged. Okay? Okay, if you had $100 million in your account and you used a mini lot, 150 pips is not a lot. Okay? But the thing is, you will be in good trades. So here's the thing. So I come back after a week or two of somebody doing this. I say, did you have mostly winners or mostly losers? If they say mostly winners, then I do know their strategy is fine, but their tactics are poor, and that's what I work on as their coach. If most of their trades are losers, then I know they have a strategy problem, not a tactical problem, and then we work on that. Okay? Okay, you see what I mean? And of course, yeah, then maybe because of that, you're more willing to stay in the trades longer, which is something I've been preaching forever, right? Well, the more important than doubling the stop and having your leverage, there's something more important than that. Like just drop it to a mini lot. I mean, don't even try to make money. What you should be doing is trying to become the world's greatest trader. So focus on learning. So I would rather you do what you're doing now on one account and then have another account, like a demo account, and do what you're supposed to do on that account. So let's say you normally use a 30 pip stop, maybe a good trade for you is 50, 60 pips. Okay, do that. And then do what Uncle Wayne tells you. And instead of a 50-50 OCO, do a 150-300 OCO. Okay? And let's see which one makes more money. Okay? But whatever. Test and reflect, guys. Test and reflect. Scientific methodology. All right. This is the buy zone. Okay, and we have a role reversal. Way out of position, but it makes sense. And of course, do you see the neutral zone? What does my book say? The 200 EMA is a target, not an entry. So I'm not suggesting you buy there, but when this was falling, that was the target. That's what it's suggesting. So now the market is neutral, but a little bit bullish. Not bullish, but it'd be a terrible place to sell because it's late. You see what I mean? So look, the pivots are, I mean, that it's just redonkulously out of position. But check this out. You see this? That's a swing sell. Now, I wouldn't have guessed we're going to the 200. Even if I sold that, which I didn't. I'm busy. Even if I sold that, that's X. The X's would have been the target. So beyond that is irrelevant. Okay? And almost dangerous. Like if you ignore the obvious, then that's a little dangerous. The worst thing is if you ignored it and made money, you're going to reinforce your negative behavior. Yeah, Ed, I recommend stops. Even just for, you know, I think in my book I say something about just in case I had a heart attack or something. I find that newer traders, their stops are so close because they're so worried about losing money, and that prevents them from getting into good trades. They get unlucky and they get knocked out. Therefore, they lose confidence. Therefore, their stops get even closer, and it's a vicious cycle. But your stop isn't there like it's there for different reasons. I use it there for in case there's some sort of catastrophic failure. But inevitably, as a professional trader, I mean, I don't want to lose money. I try not to lose money. I have safety mechanisms in place to prevent massive losses, but I don't worry about losing money. That's not. I mean, it's not a fear. Most of the time, I make money. I mean, it's a different mentality. You see what I mean? Where if the prime thought process for a newer trader is, you know, you're fearful of losing, and then the general mental attitude of a professional trader is, oh, they're going to make money, but they need to protect themselves, right? They have to have an insurance policy in case the trade fails. They'll get out of that and go find a good trade to get in, right? It's a whole different mentality. And very often the stops are too close for the newer trader. And like I said, then getting knocked out breaks your spirit, and it's a vicious cycle, not a virtuous cycle. Okay, beast. This is where you're supposed to get out, just so you know. If you're a bear, congratulations. It's a beautiful swing. Look how perfect that swing short is, but you're supposed to take profit. Okay? Enough said. That's it. If you're a bear, you're supposed to take profit there. Good trade. Get out. Aussi. Yeah, I mean, it's off the central pivot. That's it. There's still some bearishness potential in here. Like whoever sold here, that was a pretty good entry. I suppose you'd argue, I mean, obviously that's a central pivot play. Well, so we know bulls exist. So now you got to pick your line. We're in the neutral zone, so to speak. So bulls buy here, bears are going to sell here. You could reverse fib this, but I find that very often it's confirmation bias. But a bear would do something like this. 618 predicts a 1382. 1382 is right there. and it's an M1 done. You see? See what I did? Okay. Okay. This is a 618, which predicts a 1382, which is also an M3. Well, I guess I should use weekly. Where's the weekly M3? Oh, it is a weekly. I'm at 3. Okay. There's a weekly M3 right here. And the weekly M1, so I'll do this, WM1, is the target, which is also here, which is also the 1382, which the 618 predicts. Okay? So if you're a bear, you're smelling that big time. Okay? That's the weekly play. And then monthly, you're at a monthly M3, MM3, and the target is below the green zone. Off the charts. Okay, WTI. Okay, look at the day trade. Up into the target, instant collapse, back into the range. Bottom of the range is here, top of the range is here. So it doesn't give you much entry. Okay, doesn't give you much entry. Gold. Okay, gold down into the weekly target. It's an out of position. Typically, you look for a counter trend trade. Okay, so that would put us back to the central. Okay, that's what's typical. It's a strange time of the year. It's July, right before a holiday. It may just do nothing. Well, lack of everyone. Remind yourself, guys, this is not normal market conditions. I told you that the day after the Fed meeting, things were going to dry up once we deal with the response to the Fed meeting. I told you that in January. January, not June, January. So we are in a time now where there may be no follow through. And it's not that there's no bulls, there's no bears either. Write it down, stand on your chair, say it out loud. But you need to manifest it. Like, this is sideways season. I'm supposed to be shooting at rabbits. You need to change your behavior. Market conditions have changed. You need to change your behavior. Shooting at rabbits, aka scalping and smaller term trades, may be the way to go this time of year. You have to make these decisions. Sometimes I just live on 25 OCOs. Okay? I might say to myself, support will always hold, resistance will always hold. There is no trend. Okay? Remember the Matrix? There is no spoon? Well, there ain't no trend either. There only is. There's not what there will be, there only is. I don't know. I don't know if that's the right answer. You need to think about it. You need to ponder it. You need to say, what would I do if I thought trades would not follow through? Or what would I do if I thought the markets were thin, the markets were quiet? What would I do if I thought we were in consolidation? How would I handle this as the trading expert? There you go, Stephen. Yeah. Yep. Okay, guys. It's 8:15 in the morning. I'm getting dizzy. I'm so tired, but maybe I should go eat and get some coffee into me. Whew. Sorry, they're short and sweet. But I'm here for you. And again, I thank you for the 15th time today. Thank you for your patience with me. It's pretty hard being in a different part of the world, living in different conditions, having minimal tools and resources, being away from my typical emotional support system, and not sleeping more than 4 hours a day for weeks on end. I mean, it's this is a tough gig, but I hope you appreciate that. You're that important to me. That on top of all of that, instead of sleeping, you know how you feel like when you woke up and you have only slept 4.5 hours, and you have the total right, the total capability of sleeping in a couple more hours. I could do that. I could be sleeping right now for a couple more hours. There's no reason for me to be up. But you're important to me, and I care about you, and this time is valuable to me. So again, thank you for the flexibility of not having the exact normal regular schedule, a little bit shorter than normal webinars, but I think we use our time wisely. And so now I got to go kick some ass. So again, thank you for being on my team. Peace on earth. May the pips be with you. May your profits be above average. And you want to meet tomorrow? It gets weird now because of holidays. I guess we'll do July 3rd. Obviously, we're not going to meet July 4th. And I think July 5th, the markets are closed. So that means we're closed. Is Friday non-farm payrolls? Yeah, so I think I got to do that. So tomorrow might be the last day here. The next day, I guess, is Thursday. Markets are closed, so there's no webinar. And then Friday, I think I got non-farm payrolls. So, yeah. So that's our week. Yeah, so again, thank you for being in my life. I will see you tomorrow. Cheers.